Guys, super excited to share my experience and from what I can give it back to the trading community or who are desperately trying to learn. My name is Ali, originally from Pakistan, came here to US 10 years ago, currently living in Dallas, and I'm in IT as you saw from the poster. I'm in IT, and I do trading, and I'm planning on moving full-time into trading sometime soon. Let's get started. A little bit about my trading background before I get into it. I've been trading for about 3 years, and I've been profitable for about 12 months, last 12 months. Now, when I say profitable, I mean consistently profitable. Consistently profitable is CPT. Just like we have PhDs and MBAs, there's a thing called CPT, which is consistently profitable trader. And I made money in the first month, second month, first year, 2 years. But what I'm saying is that what matters the most is, or when you call yourself a successful trader, is when you are a CPT. Okay, so month after month for the last 12 months, I've been making money by the grace of God. Anything could happen tomorrow, but that's what I'm at right now. And what I learned, and that's what I'm going to be discussing in this next hour or so. Things that made me from, a little less profitable to be more profitable and going on forward. And now my curve is on the uptrend, and I hope to continue to keep the same. And so what I learned from the last 3 years of my trading were there are 4 aspects of trading, and they all have to be interconnected in order to be a consistently profitable trader, okay, and make it as a business. The first one was technical analysis, which is candlestick charts, and I think that's an easy as far as other parts are concerned. So the first is technical analysis. Second is fundamental analysis, which is news catalyst, right? When there's a news or it's a good company, has good earnings, those are called news catalysts, also called fundamental analysis. Third is risk management, which I believe is moderate as compared to the level is concerned, as compared to fundamental and technical analysis. But I think it's the most important aspect of trading. And the third or the fourth is a trading psychology, which is, I think, the toughest, because I feel this is the toughest for me. And psychology comes in when basically how you control your emotions, right, during trading. And I believe a lot of you are going through the same thing too, is that even though you're good at it, you can do it, but there's something at the back of your mind, there's something is stopping and you just don't know what it is, right? And that is psychology. And the reason why I think it's tough also is because trading psychology is something sometimes not in your hands. For example, you're doing amazing, you're really doing good in trading. Next day you wake up and there's somebody, God forbid, in your family is not well or is really in bad health or pass away. All of a sudden, your mind, you're not going to be able to focus in something that you're doing 100%, and it's going to affect your psychology. So even though you're fully controlled, there are some times where you're not going to be able to control your mind. And how you deal with that while you're in trading or while you're trading is how it affects your results, how it will determine how it's going to determine your future, actually. Okay, so knowing in psychology is there are going to be hurdles, but how you deal with it is what's going to determine your success. Okay, and we're going to go a little bit in detail, but these are the 4 things, and they all have to be interconnected. If you're missing one thing, chances are you're not going to be consistently profitable. Again, everybody can make money. A little kid can wake up tomorrow, buy one stock or buy one, invest in one company, and next day could go up and you can make money. Making money is not an issue, right? That's why I couldn't make consistent money for the first 2 years. I mean, I remember countless nights of sleepless nights, depression. Oh my God, I can't go on and on. And what I realized, all these 4 things has to be in there, okay? So what we'll learn today, fundamentals of technical analysis, okay? So I'm gonna touch the basics where basically what my goal is to build pillars. And then from there, it's up to you how much work you put in. But my goal is to put you what I didn't know my first 2 years, where to even look at. So my goal is to just build those pillars and you can build on top of it, okay? So technical analysis, how to read charts, and how to manage risk and decide how much to buy, okay? I think that was one of the biggest things for me. I was doing great my first year. My second year, I was just losing because of risk management, okay? Complete guide to risk management, and I think that's one of the most important part, and that's my main topic today, okay? And real life examples of implementation from what we learned. So what we're gonna learn all this at the end, I'm gonna put this into a real test, I'm gonna show you real life examples, okay? And I really, really need you to focus at starts. The way I've built these slides are that they're gonna like fall into puzzles, just like a movie. At the end you watch all scenes. At the end they all follow up and they all just interconnect at the end and just all make sense. That's what's gonna be. So I really hope that you focus. And I'm gonna try to speak slow. I do get people tell me that I speak a little fast because I get really excited when I talk about stocks. I think about stocks all day. When I'm in the shower, when I'm eating, when I'm just walking, I think about stocks all day. So I get really, really excited. It gives me a lot of energy, okay? So, I really need you to focus. And then we're gonna end with Q&A, all right? So let's get started. All right, so what you will learn in technical analysis. So I'm gonna show you what are the types of support and resistance levels, okay? What are horizontal and vertical resistance levels? So there are basically two types of levels. What are chart patterns and how to recognize them? And then using these skills, you can recognize great buying and selling prices to maximize your profits, okay? And also, in my opinion, why I think that without knowing these important rules, you are gambling in the market. If you don't know, please stop and reevaluate, okay? So let's get into it. First is support and resistance basics. You probably guys know this, but I'm gonna touch it. I'm gonna expect that guys don't know. The only prerequisite is that you understand the basic charts. Just think of it as a line graph, okay? You don't have to, it doesn't have to be, you don't have to think it's too complicated, just basic lines charting. That's all you need to know. So there are 4 steps, there are 4 things that you need to know in order to recognize support and resistance and to know the basics, right? The first is prices have high and low points. So you have to know, and it's pretty much everything in life, right? You have high and lows. So same thing in prices as well. The prices have high and lows, and I have circled here. So this is the low of the price action, and this is the high of the price action, okay? And the lows are called support, and the highs are called resistance. So these are support, and these are resistance. So basically, support levels are where the price cannot go below the area. So these are support levels where the price cannot go below. And these are resistance level where the price cannot go above, okay? And once you know support and resistance, what happens is that the prices are normally falling in a channel. So you see it's falling in this channel. And eventually what happens, the price breaks out, which is this level. Okay, so finally it could not act as resistance anymore and it broke out. So what happens, the price goes up and then it finds new resistance, okay? And eventually it comes down, and that's where the 4th and the final rule comes in is resistance becomes support once it's broken. So at this area, the price broke, it went up, found new resistance, and look where it came down to. Came down to the same area where it was resistance before, okay? This is very, very, very powerful, and I'm going to repeat it one more time. I may have spoken a little bit quick, so I'm going to go one more time here. So we know that prices have lows and highs, and those are drawn by my red circles. Support is where the price level cannot go below, so those are the support levels. Resistance is where the price level cannot go above, okay? So that's how we realize resistance and support. And then once the resistance does break, that same resistance becomes support. And these are the basis and the thesis we're gonna be, it's the pillar of what we're gonna be talking about, okay? So just watch it one more time. I'm gonna go and give you more examples so it's gonna make more sense. So don't worry about it, I'm gonna give you more examples. So now that you understand the basics of support and resistance, we're gonna look at the chart of AMD. So this is a stock of AMD. The reason why I put AMD as an example, the reason why, because everybody knows the stock AMD, right? AMD has gone from $10 to 84 in the last 2 years. And everybody knows about it. If you are in a stock market, or if you are even remotely experienced in trading or buying stocks and selling, you would know the stock AMD. So we're going to do a technical analysis of AMD. Right now, AMD looks gibberish. Okay, I mean, just you know that it's going up and down, but it's going up and up and up. But if you knew the basic technical analysis, which you just learned in the previous slide, it could be very, very, very powerful. You can make your living off of it, just off that. And that's what we're going to talk about. So in 2017, notice AMD was around $10, okay? And it had trouble, about $12, it had trouble breaking. So we can clearly draw a support, resistance line, which we learned in the previous, where the price could not go above, okay? So clearly it was acting as resistance, and eventually it did break because AMD is a good company and it was showing good signs of earnings. So eventually it broke out. Now what we learned from our previous slide was that the support becomes resistance. Okay, so notice the stock did go up and it came down to where? The previous support, and then it kept going up. Okay, so it acted as support, and then now it's going to look for its next resistance, okay, which is up here. So the stock went up, and now we can safely find and make a resistance level. Okay, eventually it does come down, and the reason why it comes down is because people are taking profits. So it comes down, and look, where did it come down to? The same support area, which is why we learned that the same area which broke before becomes support. So knowing that, just that, you would know where to buy, which is at this area, because you knew that when the stock does go up and it comes down to where? To support area. All right. Now, needless to say, the stock comes down and then it starts to go up again. Look where it found resistance. This is not a coincidence. We knew from before that this is where the price previously has trouble going, and look where it came down to 3 times, okay? And then eventually it does break. What happens? The same area becomes support, and then stock goes up again, okay? Now look, where did it found resistance again? Again up, so it kept going up and up and up, finally found resistance, it came down, okay? Where did it come down to? Previous support area. So if you, let's say that if you didn't know where to buy, the AMD keeps going up and up, you know if whenever it comes down close to the support area, this is a good place to buy, because you know it was previously as resistance, so now should act as support, okay? And then when the stock goes back up again, look where it had trouble. Previous area, right? Previous area. And then finally at this area it breaks. So it's safe to draw a resistance line. Now, just imagine 2 minutes ago or 5 minutes ago, we had no lines drawn whatsoever, okay? But now that I've drawn, you can easily tell what would be the great prices to buy. This would be a great price to buy. This would be a great price to buy just because of the support and resistance, right? This would be a great price to buy. This would be a great price to buy. So you know if you're close to support, you expect that it's gonna hold and it's gonna go up, okay? If it's a good company. And then finally, when it broke out here, it's called a breakout level. When it breaks out the previous resistance, look, it just kept going up and up and up, okay? So now I hope that you understand the basic support and resistance level. What happens is that if there's resistance, when it breaks, the same area becomes support, and then the stock pushes up. Now, pretty much most of you guys already know this, okay? But what I wanna deep go down is the trading psychology, which is most people don't understand. And the reason is that people think when the stock comes down, that's a good area to buy. And then when the stock goes up, that's not a really good area to buy, right? Well, in some cases it's actually wrong, especially in AMD. The stock keeps, if you thought that stock was making all-time highs because this was never in this area, the stock had never gone up before. So you should have never bought it, right? But look, it just keeps going up and it never even came down. Now the reason is that every single time stock breaks previous resistance, it moves into a new territory. So we're going to take this as an example. On this area, which is about $35, if you look at the back, the stock had never traded $35 before. It came down to about 34, 34, 34, 34, 34, and finally broke 34 and went to 35, right? What does that mean is that at 35, nobody has ever bought the stock before, correct? Because the max people would have bought at 34 because that's where the stock came up before, right? And it never went up before 34, above 34. So that means that there are no sellers whatsoever, right? If you have never bought the stock at 35, how are you gonna sell? So it means when the stock AMD went up to 35, not a single person in the world had a cost basis of stock buying at 35. That means that they are in profit. And if you are in profit, you're normally pretty chill, right? You're not worried because you're in the green, and that your psychology is that you're very, very stable. You're calm, you're green, you have more time to think, right? It means you're not gonna immediately sell. What that means, if you're not immediately gonna sell, it means that there are less sellers than buyers, which causes the stock to go up even more, okay? The same thing happened here when the stock went up above $60. There are no sellers. Nobody ever bought the stock before. That is why the stock just keeps going up and up, okay? So that's the basic psychology behind why when the stock goes up, it just keeps going up and up. It's because there are no sellers at the back. So it causes the supply and demand chain, demand to be more and supply to be less, all right? Now, I'm gonna go through real quick, just another example of support resistance levels, okay? So again, this stock is just a normal stock. I actually put in a $9 stock just to show, a cheaper work on cheaper stocks as well. So here, clearly it was a resistance, okay? These are two lines. So now we know as soon as the resistance breaks, the stock surges up and it finds new resistance again, okay? That same resistance then becomes support. So it goes up and it comes down where it finds support. Then when the resistance breaks, again, it pushes up because there are no sellers, right? Nobody ever bought it, so it just keeps going up. Then again, it finds resistance. And then when the resistance breaks, again, it becomes support and the stock pushes up, okay? Now, whenever I teach this to people, they all ask me, do you trade penny stocks? What about penny stocks? You just show me all the big ones. It works on penny stocks as well. However, penny stocks are a little more volatile. That's why I do not recommend to new people. I recommend medium stocks, AMD, Royal Caribbean, or medium price stocks, or any high price stock works as well, okay? But the thing with penny stocks is that they go up and down really, really quick, and the person who has no experience can get caught, okay? But here's an example of DVAX. It's actually a same day, okay? So each candle is 1 minute. So in 1 minute, the stock went up from $5 to, with 3 candles, it went up to $6.60, which is like 30%, okay? So in 3 minutes, the stock went up 30%. So let's do the technical analysis on this. First, we know support. So thus clearly here at the $5 area, it found support, okay? And now you see that it found support one time and then it went up and it came down here again and again it found support. What does that mean is that whenever the stock comes back down, people buy it. So it means they're buying going on here. And that is why we draw support. Okay, basically support means buyers and resistance means sellers. And it's also called a double bottom. So a double bottom means it bottom once, came down, and then it bottomed twice. It's called a double bottom. Okay, and then as soon as the buyers realize that there's lots of buyers, so all the other buyers step up as well, and the stock pushed really up really quick. Now, knowing that if the resistance break is a good place to buy, right? We just learned from the previous examples. So this would be a great opportunity to buy. All right. Now let's say that you missed it. and it just really, I mean, I would have missed it too if I wasn't watching. It could just happen in 1 minute. Okay, so if you're not a consistent, like, you know, if you're not trading and watching the stock, it'd be really tough to buy. Okay, so what happens is the stock goes up, and look, where does it come down to? So you would know already when this all thing happened, you would know already that this is a support area. So the stock would most likely come here and find support. So you could have bought here. And the rule is resistance becomes support if price breaks that level. So the price broke that level, which was previous resistance, and it came down, and look where it goes. So it'll be a great price to buy. Okay. Now that you learned the basics of horizontal support lines, right? Horizontal, we're going to learn the next, which is the vertical resistance line. So the vertical resistance line is basically vertical, right? So now we already know horizontal, and now we're going to show you vertical. This is vertical. So notice how the stock is going down, right? It's not going down out of no reason. It's forming a pattern. And that's a language of Wall Street. Wall Street, they don't want to tell, you know, amateurs how to trade, or it's they have their own language, and basically support resistance is their language. Okay. Now notice that you can, if you draw this line, before I didn't have this line drawn, all of a sudden I draw this line, and you can see there's resistance. Every time it comes to this line, it's acting as resistance, And once it breaks, by the law of support and resistance, if the resistance breaks, that same thing becomes support, and then the price goes away from it, right? And that's exactly what happened, but just in a different manner. Also, if you notice, it's also like a channel. So you can draw resistance at the bottom here as well. So it's forming a channel, and that's what's called a vertical resistance, okay? So knowing that, this would be a great area to buy, right? So it'd be a great area to buy here. And knowing horizontal resistance, you will know where to sell. So if you just understand the basic concept of support resistance, which I just showed you in 10 minutes, right? You will know where to buy and also where to sell, because you know there is resistance on top, right? And that's it. This is the power of support and resistance line. You can literally buy the bottom and sell the tops with it. And that's it. I did not use, notice I did not use any indicators or any types of complicated stuff. Just basic. Kept it simple. And that's one of the key what I learned in my last 3 years of experience. Okay, so keep it as simple as possible. And by the way, the stop loss, which I'm going to go detailing further, is going to be below this area, because if this price breaks out of this channel and it keeps going down, it means your pattern is not relevant anymore. So there's no need for you to stay in the stock anymore, which is very, very important. I'm going to display this, discuss with this further in risk management. Okay. So let's look up another example. Same thing. So here you see the stock just going up and down, but if you just draw a simple trend line, it's called a trend line, which is a vertical resistance, you can notice that as soon as it broke, it would be a great opportunity to buy. Okay. Now, I've taught you 2 things. One is horizontal, and the second is vertical lines. Horizontal will be this one, and vertical will be this one. Okay, but the cool thing is that if you combine both of these together, it forms very, very, very powerful breakouts, which gives you very, very high returns. So let's look at this. So this will be a great area to buy, but let's say that you missed it. Okay, notice there's a small support going on here. Okay, horizontal, and then notice there's a vertical going on. So I combine both these together. And as soon as it breaks out at this area, look how powerful the move was. And this, by the way, each candle is 2 minutes. So basically this happened in 40 minutes. So the stock went up $2 approximately. So let's say if you had 1,000 shares, you would make 2,000 in 40 minutes. Okay. And that's the reason why. Now let me show you the psychology behind it. So what happened is that there are different kinds of traders. People who buy supports. So people who saw support, they bought at support level. Okay. And people who buy this vertical support, they buy it too when it breaks. So there are 2 types of buyers combining at the same area. That's what it causes a huge. it's all about support, demand, right? Buying and selling. So whenever there are more buyers, the stock price is going to go up quicker. When there's less buyers, stock price is going to go smaller, or like lower or slower. Okay. Now let's say that you missed it. Okay, you missed it. Notice there's another trend forming. See, before I didn't draw this, it would be really, really tough for you to know. But once I draw vertical and horizontal, and look how easy it would be to buy right here as soon as it comes out of this channel. And the stock did go up, it went up, you would have taken profits here because your risk to reward. You're risking only here. So let's say you bought here and it comes down, you get out, you got a very small loss. So if you're risking $100, you would end up making $300-400 because it went to like 1 to 4 risk reward. Okay. I'm going to discuss risk to reward in future, but I just want to show you guys the technical analysis at the point, and then we're going to merge risk management in it as well. Okay. Now, everybody tells me I had to bring Tesla in there because if I don't know about talk about Tesla, the most famous stock in the world, how can we end this webinar, right? So we're going to do a technical analysis on Tesla, and once I show you how, if you knew about this before, how you could have entered in the best possible prices, okay? So let's do a basic technical analysis on it. We're gonna draw a simple resistance line. So we know the Tesla in 2019 had trouble going around this area, okay? And finally breaks out. Finally breaks out and finds a new resistance, right? So resistance is where the price cannot go above, and then again it breaks out. So when it breaks out again, there are no, right? There are no sellers. The stock starts going up and up and up and up, right? So if you knew when this resistance breaks, you could have bought it here, okay? But let's say you missed it. Let's say you missed it. Look, where did it come down to? And by the way, this area, the stock went up to $1,000, right? Everybody was going crazy. This Tesla was all over the news. And COVID hit, right? COVID hit and everything went down and brought Tesla down too. Kept going down and down and down and down and down and down. Look, where did it come down to? The previous support, right? And actually, I knew this, so I bought it here, okay? I bought Tesla right here. And next day I woke up, it went from 350 to 500. And I was so ecstatic, I sold it. I sold it. I'm sure you guys have done the same, pretty much similar stuff where the stock keeps going up, and every day since then I've been watching this, it's just been going up. If I had not sold it, I'd probably not be sitting here, probably sitting somewhere at the beach. It hurts, but that's the power of support resistance. That's what I'm trying to say. That you would have known where it could possibly bounce. And look, it's not a coincidence. It's not a coincidence. I showed you in AMD, the most popular stock. I showed you in Tesla. Now, you know this, you know the horizontal, right? Let's use vertical now. So you see how the price here went up straight? Before it could not break above, but look, there's a hidden pattern going on, which is a vertical resistance. So there's a vertical resistance, Tesla could not break, and finally when it did break, it would be a great area to buy. And then I showed you the power of using both vertical and horizontal. And if you draw this small pattern going on here at $1,000, if you could have bought here at the break, if you were watching and if you knew the pattern, if you were able to recognize in real time, look, you could have bought at the perfect area, and the stock just went from $1,000 to $1,800 straight. It did not even come back down, okay? Now, recently, the last week, Tesla has been ripping, right? It's up like $500. Like, no, let's see, it went from $1,300 to $1,700, $500, right? But what if I show you there's a hidden pattern here as well? Look, same pattern. So you could have bought here, okay? And like that's at 1,600, and now it's at like 1,700, so like $100, okay? So I can go on and on and on and on about chart patterns, but if you want to just look at it, just Google it and you will find tons of chart patterns, how they work, okay? So this is the basics of technical analysis. I'm going to move on to risk management now. So What will you learn in risk management? Okay, there are 3 keys to risk management. One is a systematic trading plan. Second is risk to reward ratio. And third is appropriate position sizing. This is the most important part. Appropriate position sizing is the most important part. And if you want to take away something from this, take this, in my opinion. Okay. So when I say must have a systematic strategy, what I mean is that if you have a strategy, then you will not buy and sell on base of emotions. Because if you know there's a trend line break, you're going to buy there. You're not going to buy if you feel something is good, right? It also helps you to think and do less during the trade, because clearly you already have a plan, so you're just following the plan. Now, a full plan of a trading is that you know your entry, you know your exit if you're right, and you also know your stops. These are the 3 things you need to know before you enter in a trading, before you buy something. Okay, and that is risk management in a nutshell. Because the goal is to remove emotions out of the picture and plan the trade so you can trade the plan. Okay, so I'm going to show you an example here. Very simple, basic support resistance, right? So a complete trading plan would be that you know there's a support in there, so you buy close to support. Okay, so you know your entry. Okay, and you know your exit as well, because you know your resistance, so you need to know that you're going to sell close to resistance. But what if you're wrong? So you need to know your stop loss. So your stop loss would be if it breaks below this support level, because then it's not support anymore. So you get out. So you take a small loss if you're wrong, but if you're right, you take a big win. Okay, and that's a complete strategy. So for example, you buy, and if it goes against you, you know where to get out. If you buy, if it works in your favor, you also know where to take profits. So you need to know before the trade. So that way you have if it goes against you, you're not caught like a deer in a headlight, right? And you're just looking at there's so much money just bleeding. You know, if you're wrong, you know where to get out, okay? That brings us to risk to reward ratio. The most important thing is that a lot of people ask me when I teach them, they ask me, so what is your winning percentage? Is it 60%, 70%? The truth is, it does not matter. A winning strategy, if you have a winning strategy, it's designed to have big winners and small losers, okay? So for example, if I make 10 trades, right, and I'm right 90% of the time, so if I make 9 trades, 90%, and I win $10 every single time, and I lose $100 one time, I'm not gonna make money, even though with a 90% win rate, because my loser is way bigger than all my winners. Similarly, if I'm only right 40% of the time, but on my 4 trades, I make $80, on my 6 losing trades, I lose $20. So basically, I'm still end up being $200 profitable. So you see, winning percent does not matter. If I tell you my winning percent 90%, and you're like, oh my God, you're awesome, I'm gonna learn from you. But what if I'm losing money anyway? Because my losers are way bigger, right? But now let's say that my winning percent is 40%, and you're like, Ali, you're not really that good of a trader. I don't know if I want to learn from you. You're gonna lose or you're gonna miss out some great opportunities, right? So that's not the right mentality, and that's, I think, is very, very important to know. Now, so let me just show you real quick on the risk to reward. So the idea of risk to reward is that when you are wrong, you cut your losers really, really quick. And when you're right, you let the winning traders run, okay? Because it's a game of probabilities, which I just talked about. Because let's just face it, market doesn't ask you your win rate to pay you, right? If I'm up 40% and my account is green, market's not gonna say, oh, you're 40% right only, the other guy's 50%, he deserves more money. No, it's about who has the more money, takes more money at home, right? So just a real quick here chart that I got here is that if you are taking 1-to-1, so for example, if you're risking $100 to make $100, you have to break even at 50, right? If you're at 50% win rate, 1-to-1, you have to be right 50% of the time just to break even. And if you're up 60% of the time, then you're gonna start making money. But if you're risking $100 to make 200, so that's 2-to-1 risk to reward, even if you're right 30% of the time, you're gonna make money. So you don't have to be right all the time. And I think that's something very, very tough for traders to understand, and for me to understand as well at first, was because we as people are designed, you know, when you went to high school, when you went to college, when you went to university, we knew that we had to make at least 90% or above 90% to get a very, very good grade. right? But in trading, it's not that. So it's very hard because we are being wired, right, to be right 90% of the time. That's why when we're wrong, we don't accept our defeat and we let it go against us. And even though we're right 90% of the time, that one trade takes all of our losses, all of our gains, and we end up losing money, right? That's what happened to me. I was right. I was doing so well. Still, there will be times when I would just lose one trade and it would wipe all my profits. Okay, so similarly, so all you have to do is that you have to know. That is why when we say in trading, you have to know your own personality. Are you okay losing 50%? Are you okay losing 30% of the time? Are you okay losing 70% of the time? Depends how it works for you. And then you have to find your strategy to fit it in your personal needs, okay? Now, once you know this, right, once you have a proper trading system and understand the risk to reward, now you have to focus on position sizing, which is the most important part. When I say position sizing, that means is that how many, I'm sure you guys have had this experience, is that you bought a stock, it went up, you made money. Then you bought a stock again, it went up, you made money. Then you bought a stock again, you went up and make money. And you feel like a god, you know that, oh my God, I am doing great. Every time you were buying 200 shares, for example, and you were making money, this time you think, okay, I'm doing amazing, right? I know what I'm doing. You buy 1,000 shares next time. And that one trade goes against you. And you lost all the money that you made on all those three, correct? Now, imagine that if you made all those three trades, but the fourth trade, you also bought 200 shares, for example. And in the first three trades, you make $300 each. So you made $300, so you made a total of $900. But the fourth one that you lost with the same position size, so you lost $300. So again, you're up 600. But if you had bought way too many shares in the fourth time, you would have lost all of the money. And that's when what I mean by position sizing. They all have to be the same. And then once you're getting better, you increase it slowly and slowly and slowly. You don't increase all of a sudden 100 by 100 or 200%. Okay, I'm going to explain it to you in an example that was going to make more sense. So you need to know how much you're going to lose before you get into a trade. That's how you realize your position sizing. Okay. So for example, if you're risking 100 to make 300, so risk to reward would be 1, 2, 3, then you should only buy enough shares so that if it hits your stop loss, you end up being wrong and you only lose $100. So every time when you're wrong, you're going to lose 100, and every time you're right, you're going to win $300. Okay, and that's how you realize your position sizing. Now, there's one tip that my mentor told me. Every time I would buy, and I would, you know, when the stock would be going against me, and I wouldn't know what to do, and I would panic, right? So my mentor told me that how many shares should you buy? Like 1,000, 2,000, 3,000, or 100? The key is that if you buy a stock, okay, and let's say you bought 1,000 shares, and when the stock goes against you, even though it's not hitting your stop loss and your heart is pumping, it means you have too much size, right? When you're getting anxiety, it means you have too much size. Cut the size. Go down to 100 shares. Because if with 100 shares, if you lose, let's say $100, and with 1,000 shares, you lose 1,000, maybe you're okay with losing $100. But if you're not okay with losing 1,000, then there's no need for you to buy 1,000 shares. Okay, so to know what is the correct size for you is to know when your heart is pounding, it means that you have too much size. Okay, and that's how you would know, and that's how you realize your correct position size, and then build on from there. Okay. Now, position sizing, this is so important. That's why I'm going to have one more slide on it. Is that if you are immediately stop, if you're buying set numbers of shares every time and reevaluate. For example, if you buy every time you see a stock, you buy 200 shares again, or you buy 300 shares, 300 shares. This is not the right way to do it. Okay. So for example, if you buy 100 shares with a stop loss of $20, for example, if you're buying Tesla and you buy 100 shares, obviously Tesla moved $10 up and down. So you need to give some more room. So you need to maybe give $20 of stop loss. Okay. You will lose $2,000 with 100 shares. But let's say that you bought 100 shares with a stop loss of $1, let's say in AMD stock, because AMD is not going to move $20 up and down, it moves up $1, $2, $3 a day, all right? So if you're giving a stop loss of 100 and you buy 100 shares, you're only going to lose 100. Notice you bought 100 shares in both the stocks, right? You bought the same amount of shares, but your loss is way, way bigger in Tesla. and as compared to AMD. So it doesn't matter what amount of shares you buy. It's irrelevant. It's based on the stop loss. Okay. So share needs to be calculated based on a stop loss. So a stop loss of $1 with 100 shares will give you a result of $100 loss, right? And a stop loss of 1,000 shares with 10 cents loss will also give you a result of $100 loss. So what I mean is that if your stop loss is 10 cents and you're willing to risk $100, then you can buy 1,000 shares. You don't have to buy only 100 shares because you know your stop loss is 10 cents. So 10 cents into 1,000 shares will only result a $100 loss. But let's say if it's a bigger stock which has bigger volume, bigger room, then you want to maybe give a $1 stop loss. Then if you buy, then you cannot buy 1,000 shares because $1 stop with 1,000 shares is going to lose you $1,000. So you only want to buy 100 shares. So that way you're going to lose the same amount of money no matter what. And that keeps your emotions in check because you know no matter what, you already know how much money you're going to lose. And that's what's so important in risk management. Now, risk management. So the key is to start trading small. Learn yourself and learn your system, okay? And then once you're getting better, you increase your size by 10%. That way, you know, you don't lose all the money you made in the last 5 trades in just one trade, okay? So for example, if you're risking $100, then you risk 110 after after a week, okay? Once you start making 110, then you start risking 125. You increase by 10 more percent. Then you increase 140, and so on and on and so on, so on and so on and so on. And little do you know, once you're at 1,000, let's say, so if you're risking 1,000 to make 1, 2, 3, in one trade you can make 3,000. Same trade, right? Sky is the limit. So if the whole key is if you can only consistently make $100 a day, then nothing is stopping you to make 1,000 a day. All you have to do is increase your share size, right? But for that, you need to understand the risk management aspect. You need to have a proper trading plan, right? You need to have a proper stop loss. You need to have your psychology in check. That's what I meant by all those 4 things that I learned. They all have to be all integrated together. And once you got that, then all you have to do is increase share size, okay? And then sky is the limit, okay? So I'm gonna end this with this one example. And what we're gonna do is we're gonna add everything, all we learned in this one example, and we're gonna trade in a real life scenario, okay? So this is a stock, we learned that there's a horizontal resistance, okay, we know, and we also know there's a vertical resistance, okay? So our strategy based on that, as systematic strategy that I said in risk management, that you have to have a systematic strategy would be that if it breaks, you buy at this area. You buy at this area, okay, when it breaks out. And your stop loss will be if it breaks the support. So you're risking, it's about 50 cents because the stock is $36 stock, and it's at $36.50 right now. So if it goes against you, it's gonna go down 50 cents, okay, and you're gonna lose. So if you're risking $100, how many shares should you buy? 200 shares, okay? So you're gonna buy 200 shares at this area, and then sell. Let's say if you're risking, you want 3 to 1, it's up to you, right? It's up to you, risk or reward, what is you're comfortable with. So let's say that you're risking 1 to 3. So you buy at this area and you sell at 1 to 3 risk to reward. So you make $300, okay? And if you're wrong, you lose 100, okay? So what we did basically was that we had a systematic strategy that we did a trend line break or the vertical resistance break, okay? We knew our risk before, so our risk was $100. So we knew if you're wrong, we're gonna lose $100, okay? Risk to reward was in our favor, so we had 1, 2, 3, okay? So you only need to be right 30% of the time. So even if you do this 10, even if you write 3 out of 10 times, you're gonna make money, or you're gonna be at least break even, okay? Then you also had a proper position size, 200 shares, because you knew how many shares you should buy, okay? And that's it, that's risk management. If you do this consistently, then all you have to do is increase your size over time. So once you're buying 200, then you're gonna increase your risk to 150. If your risk was 150, instead of buying 200 shares, you're about 300 shares, right? Because if it goes against you, you're gonna lose 150 now. As you get more experience, all you have to do is just buy more shares because your risk is increasing, your tolerance is increasing. It's just like going to the gym, right? When you go to the gym first time, you lift a 20-pound dumbbell, it's too hard to lift. So you decrease your weight, you go 15, You do this for 2 weeks, and now after 2 weeks, you're able to lift 20 pounds. Exactly the same thing here, okay? Now, before I open the question, did I go 1 hour? Yeah, it's 45 minutes. So before I do, I get this, my last year, 1 year experience of teaching people. Some of the questions that I think are really good questions too, and a lot of people ask me. So I put those questions here. Maybe that will answer some of the questions from other people. Is what's the most important thing in trading? If you had to pick one, they ask me, what's the most important thing? And I think the most important thing is passion. Because if I even knew technical resistance, technical support, and knew all of this, and if I didn't have passion, my first year, I just kept losing money, right? I would have given up a long time ago. The only reason why I'm still in it is because I have passion. There are so many failures along the way, and I still to this day face so many problems. Okay, so if I did not have passion, I would not be able to keep doing this, what I'm doing. All right, so passion is number one, I think. So now, second thing, I get this question a lot. I think it's so important. Please understand this. Why put a stop loss when mostly the stock comes back up? Now, actually, 80%, 75% of the time when the stock does break the support level, if it's a good company, it comes back up, okay? But you get stopped out and you take a loss, and the stock goes back in your favor. But when I ask them is that, what if it doesn't come back up? What if the stock, you don't sell it, and it keeps going down and down and down and down, right? And that one stock, how many times has it happened to you is that you buy it and you hold and it comes back up and you're like, okay, I knew it was gonna come back, I knew it, but that one stock doesn't come back up and it just takes up all your profits, and it gives you so much depression, it gives you so much sadness, right? It kills your confidence just because of the one stock, even though it has nothing to do with your skill set. So stop losses are very, very, very important. So please always know your stop loss. If it comes back up, you can always get back in again, all right? Now they ask, what I need to learn quick, screen time. The more you look at charts, the better you're gonna get. As you saw that in Tesla, AMD, it was just right there, right there. If you just knew, it was right there. But you need to know how to be able to recognize in real time. And the only way you can recognize in real time is that if you are seeing the same pattern happening again 1,000 times before. So you have to keep looking at charts, keep keep finding the patterns in there, and that's what's going to make you better day by day, day by day, day by day. All right. What's the best charting platform? Thinkorswim. That's what I use, in my opinion. Thinkorswim by TD Ameritrade is one of the best, and it's free. So that's what I prefer. What indicators do you use? I do not use any indicators. As you saw, literally I just draw support resistance line. I think most of the indicators, RSI and MACD and all, they're just more pollution on the chart rather than helping you. They do help, but not consistently. You don't have to. You don't have to. Like I said, I just literally showed you Tesla, AMD, big stocks that just work on support and resistance. Okay. Now, last question: difference between a good trader and a bad trader. What made me consistently profitable was the day a good trader. That's what my mentor told me. My mentor said that a difference between a good trader and a bad trader is a bad trader thinks when he's entering into a stock, this is very important. When he's entering into a stock, he's thinking how much money he's going to make. Okay? And a good trader, when he's entering into a stock, he's thinking if he's wrong, how much money he's going to lose. Because if he's right, it's gonna keep going, right? Or it's gonna keep going, he will have enough time. But when he's wrong, that's when he's gonna panic. So he's already prepared when he's wrong. That's the difference between a good trader. So if you want to think, okay, where are you at? Is that what you're thinking? That's the first thing you need to think. If I'm wrong, what's going to happen to my account? Where am I going to get out? That's the one. That's the most important part. If you want to learn more, I just put my number here. I do give one-on-one sessions. If I need help, I do have a free chat room where I help out people and show people if there's a new trend forming, show them in real time. I do have a channel called Solid Trades on YouTube. I do post free. Everything is free at the moment. I am working on courses because a lot of people ask me to just get everything all together. So I'm working on a course, but right now I'm doing everything for free. I do have a full-time job at this moment. So I am just helping as many people as possible, okay? I think that's about it. That's where I'm going to end. If you want to do a Q&A session, Alibai, I am more than likely to answer questions.
Sure. Thank you so much, Ali Abbas. This was phenomenal. So really appreciate you taking out time to help out the community here. I think we have one question that came in the chat from Zishan, and his question is: support and resistance lines, should it be drawn on monthly chart or day chart, or is it valid only on yearly chart?
A support resistance line is valid on 1 minute chart, 5 minute chart, 15-minute chart, 1 day, every single chart is valid. The difference between the time frames is that if you're drawing support or resistance lines on 1 minute chart, it will go relative to the time, so it's going to work quicker. Okay, now a support is if you're drawing on a daily chart, like a 1 day chart, then it's going to take a day to work, right? So it's all relative to the time. So if you're a quick trader, you're going to use 1 minute or 5 minute charts. If you are a long-term swing trader, investor, you're going to use daily and weekly charts. It works on every single charts.
Okay, so I guess one follow-up question to that could be for beginners or for people who are just starting off, which chart would you recommend would probably be the easiest one to get started on?
So for day trading, you have to look at 1 minute chart, 5 minute chart, and daily chart. So you have to look at multiple time frames to get the bigger picture and then the smaller picture. Okay, for example, if Tesla is on the daily chart is being just kept going up and up and up. So you're going to look at the 1 minute chart and find the perfect entries to buy at the best risk to reward ratio. So that's why you use 1 minute chart to find good entries, and you look at the long-term chart to see what's the overall trend is, right? If you're trying to buy a stock which is going up in the 1 minute chart, in 1 minute, for a minute or for a few minutes, the stock is going up, but the overall, the stock has been just downtrending for like 2 years, right? Even though it goes up a little bit, it's going to come down eventually because the overall trend is downwards, right? So you look at the daily chart or the long-term frame charts to notice the trend, okay? And then you use smaller time frames to find a perfect entry. I hope this helps. It awesome. Is, you have to, again, at the end of the day, you have to look at it and you have to study it. You have to look at charts. Passion, that's why I said passion is so important, because I remember like my first 2 years, average, I watched charts 6 hours a day just to get the perspective. That's how much I had to do. Maybe I'm stupid, I'm just not that smart because it took me that long, but for me, it took me that long, to be really honest.
Thank you. We have a few more questions, and I hope I'm pronouncing the name right. Abdul Hai, would you mind unmuting yourself and asking your questions directly?
Sure, I can. So my first question is, how do you manage your day trading with full-time job?
So at this point, I am trading 1.5 hours. So my market opens at 8:30, and I trade till 10 o'clock. And what I'm doing is that I've already talked to my work, where I make sure that I do all my work before 8:30 if I have to, and then I start my work at 10. So but I cannot trade and work at the same time. You cannot do that.
And yeah, that's the challenge, especially for the people who are in East Coast.
Yeah, so you have to find. So I have a few friends who are living in California, so they trade, or their market opens at 6:30, and they trade from 6:30 to 8:30, and then they go to work at 8:30, right? So if you cannot, I suggest, if you cannot day trade, if you have to focus on work, day trading for first half an hour or an hour and a half when you're trading, you need complete focus.
Yeah, my second question is, how do you overcome the? My second question is, how did you overcome PDT role?
So 2 years ago, I started with $300. Okay, and I remember like you give yourself, like when I was making money, I'm working, right? I would give myself $300 a month to spend, like on like a pocket money, right? And rest I put in savings. And I remember I was so passionate that I would save my whole $300. So I would not buy any shirt, like no shoes, no clothes. I did not buy anything for 1 year. And every time I would save that $300 and I would put it in my account. Okay. And every month I would save 300 and I would lose that 300. Then again, I would wait and I would save that 300 and again I would lose that 300. Then again, I would save that 300 and I would lose that 300. okay? And it happened for the first 6 months. And eventually I started not losing money anymore. So that 300 turned into 600 to 900 to 1200 to, you know, and then I started making money. So I kept adding on that. And then later, then after first 2 years, I did not, I actually did not had more than 25,000. So what I was using was you can trade outside brokers, where if you're outside US, you can trade outside. If you're outside US, you don't have, PDT rule doesn't apply to you, okay? Also at the same time, I use cash account as well. So in cash account, what happens is that, let's say if you have $10,000 and you use 2,000, so you still have $8,000 to trade. Doesn't matter how many times. So if you use 2,000, so it comes back again. That $2,000 comes back again after 2 days. So you can use that $2,000 again. So what I would do, I was use $2,000. So I would divide by 5, right? So then I would trade 5 times, or I would trade, you know, 5 trades in 3 days, and then again I would get that money back. And then again I would do it. So it's called cash account. You want to search that if you don't have more than 25. What I did eventually was I kept working, and now alhamdulillah I'm like way over above PDT rule. But what I did was, I did not kept waiting to find a PDT rule, because you need to have more than $25,000 to completely properly trade, okay? But at the same time, my first year, I do not recommend having more than 25,000, because you are gonna lose. You are gonna lose money because it's really, really tough, okay? It's serious. So first I blew up 3 accounts, by the way. No, I shouldn't be sharing it, but I blew up 3 accounts. I had $2,000, I blew up my first year. Then I had $3,000, I blew up. Then I had $6,000, I blew up. And then guess what? Once I became consistently profitable, I made that all back in just 2 months. My first 2 years that I lost, I made in 2 months, because I knew. Then all I had to do is just quit. But what I did was I kept saving money. And what I kept making, I put in there, and I kept saving money as well, and I put all my pocket money in there. That's what I did.
Right. My last question is how do you use a trailing stop loss, or you move it manually when stop goes up?
I don't use trailing stop loss. I use key levels. So for example, if the stock goes up and it breaks the resistance, so that same resistance will become support, right? So that means that the stock is going to come down to support and going to go back up again. So what I do is I put my stop right below the support. I don't use trailing stop loss, because if the stock goes up and it comes down, my trailing goes up, it comes to support, it stops me out, and then it goes up, right? I only sell, I only take out when it breaks the support, because that's when the support breaks, that will become resistance, right? Just like we learned. So you don't put stop losses based on like no levels. You have to put stop losses below the levels. If the levels break, that's when the stock is going to keep going down.
All right, thank you.
Mm-hmm.
All right, cool. So I know we're on time, but if there are any other questions from anyone, please feel free to unmute yourself and speak out. You should be able to do that now. Okay.
I have one question.
Sure, go ahead.
Zishan here. I want to ask that you do this draw the line, like I know you are really expert, so you can quickly draw the line. So is there any software you use to draw resistance level line or anything?
Yes. So I use a software, Think or Swim. It's by TD Ameritrade. So if you have a broker, TD Ameritrade, they give you the software for free. And in my Q&A, like I said, that the only way to be able to draw support and resistance and realize is by getting a screen time. So screen time, what it means is that if you have looked at the stock, or if you have looked at a particular chart pattern 1,000 times, right? Next time you see it, you will immediately be able to recognize the support and resistance. So now at this point, when I look at the stock, I can easily see, okay, where's support, where's resistance, because I can see that where the price is going up and then down. So I know I have trained my mind. I've not really trained my mind, it just automatically happened because of looking at the charts again and again and again. And that is the only way to be able to get good at it. There's no other way to get better at this. So support, you have to, if you have enough time screen or screen time, whenever you look at the stock, you will see it. You will be able to see, you will be able to recognize support resistance. And then the charting software is Thinkorswim by TD Ameritrade. It comes free when you open the brokerage account. All the trading brokers give you their own platform. In my opinion, Thinkorswim by TD Ameritrade is the best.
All right. Thank you.
There was one other question. Wasim bhai, do you want to speak up, or I can narrate your question to Ali Abbas? Okay, I can go ahead and ask his question. So he's asking, are there any filters to scan stocks that are approaching key support or resistance levels in Thinkorswim?
In Thinkorswim, there's no key levels, but there is. You can YouTube it. There's some support. There's some scanners. Basically, the scanners they cannot find support resistance for you. Okay, but scanners can find is that, for example, you can filter the scan so that you say, okay, if the stock hasn't broken about a particular level for 2 weeks or 5 weeks or 6 weeks, then, so if the stock is breaking a particular level after 1 month, okay, so it means that level is very, very strong, right? So you can filter it by, okay, if the stock is making after 5 weeks, 1 month, so you can do it that way. So if you can do it by time frame, you can do it by give me stocks if the stock is breaking a certain level after 3 months, right? So it'll give you, okay, 3-month breakout level, 4-month breakout level, 5-month breakout level. The higher the levels, the months are, the stronger the breakouts will be, right? Because it hasn't crossed that level in a very, very long time.
Okay, cool. So a couple of the questions, and I think this could be our last two for the day. So question from Yahya Khan, things to check before going full-time day trader.
So that's where I am right now, actually. So I have, every day I'm thinking, should I quit my job? Should I not quit my job? I'm good at this. I'm already good at this, but I'm so used to, working, doing full-time. So I'm already doing it. But if you want to go full-time, that's what I'm doing. I'm saving 12 months of my, I talked to my mentor who's teaching me, right? And he said, 12 months, save 12 months. So if something goes wrong, you have 12 months of your expenses. Second, pay off all your debts. So I've paid off all my debts, my car, I don't have any debts. I don't own no credit card, no, mortgage. You can have mortgage, right? That's just your rent. But other than that, no debts whatsoever. If you have car, right? Car payments or anything like that, no debt. Okay. Then a fully funded trading account. So a fully funded trading account minimum would be about $40,000 to $50,000 that you want to have in your trading account that you can make enough. Now again, it's up to you. I don't know what could be your monthly expense. If it's $3,000, $4,000, $5,000, right? Depends on what is your expenses. Then based on that, and then using your trading, you have to have at least 3 to 4 years of experience and track record, at least a year, that you can say, okay, I can make enough money, right, to be consistently. I can make consistently profitable money, right? Even if I'm like really, really bad, right? I can still make enough money to cover my expenses. Then at that time, yes, you can do it. But I still think that I'm still not perfect. Even though I've done all of it, I'm still not comfortable. So as long as I'm not emotionally comfortable, I'm not gonna do it. So because I feel really, really safe to have another source of income. Okay, so that's what I would say on that. So maybe I want to have another source of income. So actually I'm working on, my YouTube channel. I'm trying to help out people. Maybe that will be my income channel, but right now I'm just doing everything for free. So at this point, I've not decided.
Okay, and then we have our last question by Farhan Badr. How do you pick your stocks for trading? On a specific day, how do you know which particular stock will you trade?
Yeah, good question. So basically what happens is called a watch list. So before the market opens, you want to do all your homework. So you create a watch list. Watch list is basically a set of stocks that you're going to be watching when the market opens. And the way you do that is before the market opens, you will know there's a pre-market session, right? Which basically the stock is gapping up or gapping down. For example, Tesla, I think you guys probably will relate to it. Tesla, there was a news came out that there was a Tesla stock split, right? So as overnight. So that stock, I know next day is going to be on everybody's watch list, right? Everybody's going to be watching stock because there's a huge news all over the news channel. So what I do is I add Tesla to my watch list because I know more and more people are going to be watching it. So I know if there's a pattern forming on Tesla, since more and more people are going to be watching it, so if there's a break on that particular stock, it's going to have a higher chance of working. Reason why is because more and more people are going to buy it, right? So so basically the main criteria of making a watch list is I watch those stocks or make a watch list of those stocks that has more and more people watching. So it could be a news, earnings, right? So the stocks are earning, just had an earning, the good earning, some news, for example, CEO news, probably CEO stepped up or stepped down, right? So those are big news. So it means more and more people watching it. So that's my goal, is to find stock that more people are going to watch that day. Because at the end of the day, that's what my mentor says, you are only good as the stocks you trade. No matter how amazing you are, right? No matter how amazing of a trader you are, and you buy the stock, if it doesn't move, you're not going to make money, right? So you want to find stocks that are going to move that day.
Okay, thank you for that. And we're at 2:10, so I think someone's sharing a few links in the chat. Feel free to use those. But thank you very much, Ali Abbas. This was extremely helpful, and we really appreciate you taking out time for this. To the participants, thank you for joining. We have recorded the session, and we will work with Ali Abbas after the session to figure out how we want to share the recording with the participants. But again, thank you very much, everyone. This was extremely helpful, at least for me. And thank you, Ali Abbas. Hopefully, we'll see you soon.
Yeah, you're welcome. All right, guys, it was great. Great joining the session. I hope I helped. Even if I hope one person, I think it's worth it for me. So, if anybody needs any help, feel free to reach out to me, and I will definitely be able to help out. All right.
Thank you.
Thank you.